Good morning, team. This is the first video of 3. We're going to run through about 120 tickers. I honestly don't remember how many. I usually start, they're alphabetically ordered, and you can scroll through the videos you don't want. So usually I start with a blurb about the indices. In this case, I will just say something very simple. I'll do a separate video later tonight or tomorrow morning guiding us what to expect for next week and what will be my plan to do with that price action. Okay, looking at the SPX, I can tell you that nothing happened. I know there were some red ticks. I know some people lost money, but if you did lose money, like buying calls, that means you're not listening to the message completely. But in reality, nothing happened. And so basically, if you're rushing to buying dips, let me show you another chart that tells you that there isn't a dip yet. And of course, that's the kind of weekend it is. So this is the same chart with a weekly version look at it. I'm trying to show you that there isn't a dip. That is the all-time high. Upper right-hand corner. We're just a few ticks away from the all-time high. So some stocks look like they've fallen into hell. Let's assume the stock market finally decides to correct a little bit and go for a few weeks on a sell the rip mode. Those stocks that are in a good base would get cheaper as well. Not as much as the ones that are still high, but they would too. So what am I saying? Nothing happened. We went from point A to point B, and we went back halfway, pretty much. The NASDAQ took the hardest hit because it has big companies that move it big time. So that's the story. The big picture is just that. Let's start with the tickers, and they are alphabetical, and this is almost always the first ticker that comes across. So I'm not excited about the global growth, and I don't know how much Alcoa is tied to the global growth, how much aluminum, what demands on aluminum. So you might want to study the fundamentals of the company to see what is coming up. This is the big picture look on it to see where the highs and where the lows are. So it's not extremely high in relation to its 2022 crazy levels like the market have exceeded, but this is a bearish scenario for me. We have had a peak a few months ago in June, another peak that failed about the same place, and here we are in the same place. This looks like they've made a little bit more improvements. Like, I'm not sure what happened on Friday. Did they report earnings or something to be up that much on a bad day? So something must have happened on Friday. Find out what it is, if it's a game changer or not for the income of the company, not that somebody upgraded it or downgraded it. If somebody upgraded it, that was a shortable pop. Anyway, so bearish setup, it could fall to 38. That's my statement on that one. I wouldn't short it, but I wouldn't go long it at these levels. All right, so who is this? Apple. We all know Apple. Apple's a short over the long term. Well, I would avoid Apple. Between Apple and Microsoft, no-brainer Microsoft for me. So anything above 230, 229 for Apple has failed. Look left. I'll point out the November reaction to the earnings as a problem that they haven't been able to overcome. That's all I got to say. And when they do overcome it, they have this yellow line and the yellow line above it to deal with it. The way Apple has to bust through all of these is by a statement that Tim Cook is looking to step down. The stock will bounce in jubilation. That's my opinion. We shall see, though. One second. So I wouldn't be long Apple at these levels. And heading into NVIDIA earnings, it might move with NVIDIA. I think it's going to be a lot depending on NVIDIA earnings. Okay. AbbVie, it had a debacle. I think the whole sector is afraid of the new sheriff, the health sheriff. Kennedy is going to crack down on them. So it's not a coincidence. If you're short XLV, AbbVie, Pfizer, Moderna, you're making a lot of money. Hi, Tom. So I wouldn't change a thing. So I don't know its fundamentals. It looks pretty good. But the doubt is cast on their future. Like, is there manipulation? Is there cheating? Is there this? Is there that? Do your homework on that one. Technically, this stock is falling into a zone of support. The bad part is that it extends $30 lower. So it could be here, it could be $30 lower. The better support that we have, the strongest support is 154 if 162 fails. As fast as it's falling, I would say this is a zone, not a hard line. I can't say, oh, it is 162.00. It isn't. It's a zone at 162 and another better zone around 155. 154 is the actual bounce. Airbnb, so also has had 3 lower highs. I know it had a strong burst on earnings. To me, if I was long, I would have been out because that is a disaster drop on the last earnings. They just got back to the same accident scene. So this is an area to exit. Wow. Is this, they barely burst around above my block, my red block. So that red block should be renamed, but I won't do it right now. So there's an even bigger block on top. So getting up here is one thing, and cracking through here will need some reassurance from the P&L. I mean, it's not a bad P&L, but we shall see. Also, this is a headline stock. You don't know when someone will change rules that will put them out of business. Not quite that dramatic, but you know what I mean? Like a large city says, you can't do this and you can't do that. It's headline prone is what I'm saying. Adobe, good company, falling into a base of support around 480. If you lose 475, you'll probably end up at 430, which is an incredible support zone. Now, the problem is it rallied so fast that there's a weak zone below that. Let me see if I can show you this, if we can go up to a weekly chart. So the rise was pretty fast, and look how wide this thing is. Is there no conviction from its owners? That's crazy stuff. So solid support around 440. If you lose it, you probably will get it for 380 or 360, which would be pretty darn good. The problem is it rose so fast and it consolidated such a wide zone that if it drops below 440, I don't think it can come back out for a long time. So yeah, it can rally. I would use the rallies to exit trades. Investments, that's on you. There is a line that needs to hold. If you lose 473, you're in danger of losing the 440. Testing, maybe even losing. We'll see. Depends on the whole market at that time. AES, is that a gold company? Who is this? No, power generation. Okay, so I'm not sure how the new administration will deal with the nuclear power. Is this one of those nuclear companies running on nuclear generation? In any case, this stock is falling into a must-hold support around 12 or 1150. The problem is they lost 16. Now 16 is a problem. 15 is a problem. If they don't get back above 16 comfortably, or even 17, look at the volume at 17, that's going to be a problem. They need a headline. I don't think they can do it in natural price action. Any rallies, I think, will be hit with resistance, and they might fall and test lower. So be careful. You see that line I did here? There's a little scribbly mark. Okay, so let's put, let me give you a visual of what can happen here. What they just lost, right? That's one thing that they lost. But I would probably better represent it this way. Once you lost this much, this guy, once you lost it, that's the risk. So they could pop. If I was drawing it ahead of time, that would be the path. And that puts you into this zone that also needs to be tested. So be careful. Technically, this is also falling below a level. It needs to be above $10. Is this another power company? What is this? Mortgages. Hey, no touchy. Mortgages. No, I wouldn't touch this. This must be a dividend payer. It is. Be careful. I used to, there were plenty of dividend payers before the 08 debacle, and they're all gone. Not like dropped, they're gone. Okay, so be careful what you get with this. There is safer dividend out there. Mortgages, if you haven't noticed, rates are climbing. Okay, so the Fed's not helping the mortgage industry, so be careful with that. Technically, you need to be above 10, otherwise you're in deep endini. How come I don't know any of these companies? Where are these stickers coming from? All right, so let me give you a general piece of advice here for me. When the you-know-what is about to hit the fan for the whole market, I run the safety to quality. I don't go down the barrel into stuff I've never heard of. At least this one has a P&L that's somewhat stable. Just make sure to go to stable companies and good stocks. A stable company doesn't always translate in a good stock. Okay, so they overcame the resistance, and now you can move the letter R above, and now the resistance is a little bit harder because it's failed at it like 5 times. So the Lou 40, 45, 44 would be a good base, and it should be pretty good support. With a P&L like this, there's no problem. If you just started longs, you know, you're going to start out red perhaps. If you look left, it's failed here a few times. AMD, I wouldn't touch it just for the simple reason of having NVIDIA reporting soon. A while back, I said 122. I put these two orange. I said it's easier to get to the lower orange than the upper orange, and it did the upper orange first. So he wants to do both, is what I'm saying. I think it'll move in sympathy to what the market does with NVIDIA, not what NVIDIA does with the report. I have no doubt it'll be a good report, but what the market does with the information, not the same thing. So if the reaction to the NVIDIA report is favorable, it might levitate this one as well. Technically speaking, this stock is falling into a prior support, so 132 needs to hold. If you lose 132, you're in danger of losing 120. What I think is possible to happen is a bounce to 148 or 151. In this case, if I was long AMD as a trade, I would use it to fix my problem or book my profit. Amazon, I said it's a short at the top, and I still say it's a short. It is in a target zone from a long time ago, and there is one above it, but it's still not a starting position. And this is my favorite company, one of my favorite companies of all time. So I'm not like hating on it or anything. It did really well. The company is on rails. They make it very convenient. I use it. I have 4 packages coming today. I promise you I'm making my contribution for the economy that I ordered last night. And support-wise, you have support scattered anywhere below 194. But I caution you that if the market hits the skids, and that's a long if, like a long shot, and we lose the orange, 180, then it may start a debacle that could just take it, drift it lower. No disasters. I don't know if it'll be affected by NVIDIA earnings. Maybe it will, maybe it won't. We'll see. Arista Network is always a buy the dip moment. This is a weird buy the dip because it's not really a dip. So a while back, we thought that it was going to hit point D, and it did. So now it's below that point D that we thought, which isn't good. So now the question is, are they going to sell the 400 rally? And again, I put this note on Friday. What will it take to break through this candle? Amazon had one of those candles, and I thought it would be impossible to break, but it broke it on a headline from NVIDIA. So maybe NVIDIA will save the market one more time. It's done that 3 times, by the way. So we could be at an all-time high by Friday of next week. We could. Depends on what the market shovels as far as crap, as far as messages. Let me rephrase on this one and make it simple. If it's not back towards 400, like 395, 398, it's at risk of going to 330, 340. I know some hardcore believers in it. Look at the P&L. It's beautiful. We'll say that'll never happen. Possibly, but what I'm seeing is that they lost the neckline. And let me see here if I can draw it. And the neckline is not a hard line in the sand always. It's not always a hard line in the sand. So if you did lose the red line, your downside scenario is from here to here, perhaps. Okay, I'm using a trackpad and it's not working for me, so back to the mouse. So that's how you get to that number down there. I'm being generous. The dip will be more. And 340 or lower should be a bargain on this. So how would I go long? I would sell puts to own shares, but that requires a large account. I would sell a put spread to start that process, and or combination of that with a debit call spread that's out in time. Split is coming. I didn't know about that, but anyway. So I wouldn't want to do any of this stuff into the split, because if you do a spread with 20 contracts, what's the split? 4 for 1. Then you would have 4 times as many contracts to close when you go to close it. It's just, I'd like to avoid it unless the deal is super good. Applied Digital, that's not Applied Materials. It looks like it has a lot of resistance at 8. Be careful of the dip to 660 and 640, and it should be support if it does that. APP, leave it, leave it. Okay, so we discussed APP last week or the week before it. Somebody wanted to short it, and I said the only way you can probably short it is through a ridiculously like a credit call spread that's quite a bit out in time, so you don't have to babysit it. 2 lower highs, question mark. Is this a third? In other words, if we get to 260, maybe it starts a chain that gets it down to 220. Anybody starting longs up here, I mean, it has a good P&L and everything, but explain to me, where's the fire? Okay, you don't think it's ever going to come back to 210 or 180? I'm pretty sure it will, but we'll see. ARKK, this is the top 10 companies in every ARK ETF are half the ETF. So that's the problem with these ETFs. I disagree with her investment thesis. We can have a discussion on it, and you can involve Warren Buffett, and he'll be on my side 100%. But the way she defends herself against her own motto for investing, and she brings it back in line with what we all believe, is by doing that. The top 10 companies are half her investment, and the rest are junk. So where she hides the junk, not all of them are junk. So this is like going long, I'm guessing Tesla, Baba, maybe JT, companies like that. Probably Spotify is in there. You can look into her investment. So yeah, just invest in her or don't invest in her. This is the market, basically. It probably will move like the small caps. Yep, it looks just like the small caps. So support, yep, into 5150, better support, anything below 4950. Then you get back to the base. Okay, I forgot to mention that the reason I say these, the rally from the presidential reaction, the U.S. presidency race, was the biggest I've ever seen across the board. Like in general terms, there are details to that statement, but no one's seen. I haven't seen an up 6%. A basket of 2,000 stocks at the same time and never retracing it. So this is basically that IWM, the 2,000 stocks in spirit, which means that there might be lower lows. Here's another stock that defies logic with its P&L. The margins that these guys have are incredible. This stock is a bargain in the 70s and 60s, bargain. Up here, it's an okay deal, fundamentally. This week, this one fell on top of the problems that the market had, fell on some news that NVIDIA lightened up its stake in it, and it looks like it rolled into some other company. I forgot what it was, a similar statement to the other company. So is it a bargain? No. Is it a good starting point? Okay, especially if you're selling puts at 100. You can invest. If somebody says, okay, I want to buy the stock for 100, come to me in the live room and I'll show you exactly how to do it right now. Someone will pay you to take it for 100. There's somebody in the live room said, I'll take it at 115. So that's where they make their money. It's a good company. Technically, I can guarantee you, not guarantee you, technically the loss of 136 puts $12 of downside at minimum. So that is step one, and probably another $8 potentially. It's not quite a head and shoulders, it's falling peaks or whatever you want to call them. They needed to hold 136, 138, and they lost it. There's an overshoot. If you look left, there is support, but it would support that overshoot because the hard line support is at 120 or 118 or 115, which leaves room to fill those numbers I just told you. These two yellow rectangle might be in line, like in sight, maybe the top one. Okay, so anyway, don't jump in too early. If I'm long arm from up here, I should have waited, but if I was, I wouldn't add here. You're wasting a bullet. You might need it lower. ASML, same statement. I said it when it reported earnings and it fell off a cliff a couple of weeks ago right here. I said, I think you will get better entries in ASML. And I drew this yellow path. Check out how this yellow path is the behavior, a pop and drop. That's what this yellow path said. They pop and drop. But notice how much smaller this pop is. Like, look here. It popped and rallied higher before it dropped. And the time before it, same. right? This one, it popped, but then it made a lower low immediately. So they're still finding the bottom. So maybe they do it here. Lower lows, lower highs. It's almost at a target we drew from up there. But you rise so fast, the support zone is very wide. Great company. You just can't catch a falling knife no matter how good it is. If I'm long, I'm not adding here. If I'm looking to get long, same deal, I would sell a put spread. It's too big for me to sell puts and buy shares, although a couple of people in the live room on Friday did that. You lock up a lot of money by selling a put, which is fine if you have a large account, but there are more efficient ways to make $300. I don't know this company, to be honest. Falling into a pretty good base, you want to consider this wide range, and it extends through 10.9. So that's the good news. The bad news is it triggered a whole bunch of, like, the loss of this targets that, the loss of this targets that. Where is it going to stop falling? The P&L doesn't look that alarming. Don't know what business they're in. Aerogel, okay, so that's very specific. Find out the business, what it's worth. Technically, you're falling into a very wide support zone. AVGO, is it this one that it invested in? NVIDIA. Okay, everything I said about ARM applies here. Great company. Everything I said about Arista applies here. Great company. They just triggered a short, losing 168. They can still recover it this week. If they don't pop back to 172, 173, preferably 174, they're probably going to drift down to 150 in a series of lower lows and lower highs. Great company. No doubt in my mind. 156, 155, 150 are in sight. I would sell puts to own shares in this one, and I wouldn't add to a current position. If I chased it up here, first statement, and also I wouldn't add here. Because why wouldn't I add here? Can anybody say, think about it, why wouldn't I add here? Because of the first 2 minutes, what did I say? It is not a dip to buy as a whole market. So if the market hasn't even started dipping, what happens to this stock if the market decides to start dipping? Maybe it's not now, but what if it does? That's why I wouldn't add to my position. I know a lot of people that are good in the room, in the group, they keep adding. But if you're not selling stuff, you're going to be hurt badly, because we will dip, I guarantee it. It always happens. That's a longer conversation. We'll discuss that in the live. It all depends on your risk appetite. BABA, I would not get involved with these. I shorted it for us up here through the FXI. All of the stocks in the Chinese market rallied this based on, I think, 2, maybe 3 announcements of record-breaking QEs in China, or panic QEs in China. I said, this will retrace, no doubt about it. They're panicking. And if China is panicking into doing this kind of quantitative easement, what do they see? What's going on in China? That's why I said you should be worried that the Fed is trying to cut rates this soon. They see something we don't. Anyway, so BABA, better position now that it repriced the whole thing. The disappointing thing is they just reported earnings and it looks in line like with the prior ones. So not sure why they reacted lower. I can tell you that 96 mattered, and look at where they died. Prior neckline, you can draw. I will put it there, but hopefully I'll remember that I didn't put it ahead of time. Losing the zone is like that other one that we discussed earlier, 2 stocks. Now it becomes impossible for them to take it back. And technically, the downside is from here to 118. So $23 of downside. Think about it. That means BABA will be in the low 70s, high 60s. So, which is what I said a long time ago. I said, don't be surprised to see BABA down there if it loses support. I don't think it's worth it to be down there, but technically you're in danger. The direct line of sight for me is about $10 from 95. Okay, so 85 is a support zone. And if you look left, that works. I didn't get my number from looking left. I got my number from looking up. Wait, didn't we just do BIIB or another one that looks like it? ABBV. Okay, so everything I said about ABBV applies here, probably even more so. Oh my God. Phew. Yeah, do not touch it because P&L or not, technically speaking, they lost a heavy support zone. Look at it. Now, $40 is the immediate target from there. So they're on their way to doing that. You can add another $40 to it, maybe even $60 in total. So yeah, there's a lot. This rally here, maybe it wasn't warranted. I wouldn't catch this falling knife. There is no support. Maybe you can argue that the zone below 145 is support, maybe. But it is a zone, and it doesn't have good support. Look at the volume. It didn't trade much here. This is a weekly chart. There's hardly any volume where we're at. That's why it's falling incessantly like this. It has not been, look at the volume down here. It hasn't had the chance to have maturity there. There are no buyers. So pretty scary stock. I wouldn't add. Not yet. BKR, Baker Hughes. Stay away. Yeah, absolutely. I wouldn't touch the whole industry. We don't know what this guy will do. This guy being Kennedy, the new health czar. Yeah, this one, if you ask me what to do with this one, I'll buy a naked put. In fact, I'm going to see if it is liquid. Why would I say that? These are rallying, I think, on the drill. I think it's going to be more of a pump. With the new administration, more so than drilling. Why would you spend money when you can pump enough? I don't think we're even near capacity on pumping. I don't know. I'm just using simple logic. I don't really know exactly what they do anyway. Is it fracking? Is it gas? Is it oil? Do your homework. This is a very, it's susceptible to drops. How about that? Even back to 39. The reaction from the election hasn't even started falling like the market. The market gave back half. This one hasn't even started, so it's vulnerable. It's shortable. BTU, probably the same logic. And look left. Sellers. Yeah, if anybody looked at my chart and remembered that I had the word sellers from before, they would have known not to buy it here. Anybody watching this video, if you bought inside this box, reach out to me. I can give you a couple of tips that will change your life forever. I'm telling you. Reach out to me. You can email me, nick@simplestocks.net, NIC, okay, at simplestocks.net, not .com. I will help you out. Or jump into the live room. Bud, is this the beer company? Oh. Okay, there's so many alternatives to beer right now. So yeah, this is a no touch because they lost, not because it's falling. It is falling. It does have support around 52. But the problem is what's above. Anything above 60 looks impossible to recover. Like, what would it bring it up here? Think about it. The market has never been higher, ever. Every asset in the world has never been higher, and these guys have a ton of transactions above. Look at that red line above. It's going to be very difficult. They're going to need a game-changing headline. I don't care what kind of support they get in the media. This is a dead ticker right here. I wouldn't touch it. This one is shortable. I lost money shorting it. It owes me about $500. So sometimes in the near future, I will take my revenge. But I don't want to make it a revenge trade. I don't have a tangible reason for it to drop, except that the chart says it's too spiky and it needs to drop until I get a tangible reason, which would be what? A pattern, a bearish pattern of sorts. I was tempted to, in fact, not only tempted, I entered an order to sell a call spread and it didn't fill. So I'm hoping it breaks out into a new high and goes to 192 and I will short it there. In fact, I will put an alert for me at 190 plus. So I'd know to do it. Strong path. If you're asking to see if you can stay long, I'm not going to answer it. You tell me. If you're not booking, locking in some profits, selling some covered calls, what are you waiting for? What is your forecast? There is no improvement in the P&L, so what is the big picture? Who is this? Avis? Yeah, I wouldn't trade this one for all the money in the world. This is a meme stock every once in a while. So not being in the meme rooms, I'm at a disadvantage. Look how messy this chart is. So on the one hand, I tell you it's impossible for it to break out of 128. And on the other hand, I tell you if it goes above 128, it may go to 180. That sounds ridiculous. This W on the daily chart says this is bearish and it might go to 92, maybe even 84. Resistance at 120. If you're long, 120 is your exit. Caterpillar, super solid company. We shorted it, and when I sent out the short notice, I said it either starts falling from here or from here. So it was from here, and then on the earnings, it reacted up. I never looked at my trade, which is up in the yellow zone. So as long as, I think, was it a December trade? As long as in the middle of December, this stock is not in the yellow zone, I won, right? So that's the kind of trade I want. I want to bet bearish, but not needing a drop to win. This might be headed to 365, target 1. Target 2, unfortunately, it's under 340. So let's say 340. So if you want me to add target 1 and target 2, I think target 2 is here. And hopefully I'll remember that I put that not when I sent the order out. Actually, I have a picture of it. So target 1 is probably here. So this is a big picture. Great company. Unlike aluminum, I know a little bit about it, that regardless of what kind of cycle the economy is in, they're going to need Caterpillar products for sure. So we'll see how that plays out. I would buy the dip in Caterpillar. Anything below 360 should be a solid support zone, and it extends lower. So it's the kind that I would, like right now, you could convince me to sell a credit put spread down here somewhere to make my trade an iron condor. You could convince me. I'm not loving the idea, but you could convince me. I wouldn't touch it. It's at a zone we thought that could happen, but I thought it would be crazy. Months ago, actually last year, sometime last year, I drew this bowl. I said, if they do this and break out, that would be the target. And they're at that target. In theory, I would exit the stock. Look left. I wouldn't be long. But, you know, there are a few stocks that are doing this, like this one, Upstart, and all of this, where they've been so much higher that you really can't tell where the failing points are, except that this one is also a target zone. So if you want to short it, fine. If you're long and you're asking permission to book profits, permission granted. I would have been out a long time ago. Okay, CELH. We've discussed it many times, and if I own an investment position, I wouldn't add until the market stabilizes. The problem is that it fell from high heaven and stabilized for a little bit and then lost another leg. This is it, the second leg. And to make things worse is that the market itself hasn't even started falling. And the worse, the sales are dropping significantly. That is alarming. And that's not seasonality. So if I invested half of a position, I wouldn't even double down. It is in a support zone. It has a lot of consolidation below 23 and 4. So if I haven't gotten out, maybe I would wait a few ticks to see. Some people like to double down in order to get out. So if you double down here, and I did discuss getting out on this rally, I said if somebody doubled down on strength, I would decide I would take back at least a double down. Yeah, I did too, but I took my lumps and went home. I decided not to double down. I just decided to take my lumps and walk away from it. So it owes me money too, but I'm not going back to it. So technically it's broken and the support is too old to matter, but it is scattered from here on down. Campbell Soup is a weird stock and it's falling into a support zone. Believe it or not, this can rally against the market. So I would expect a bounce effort to 47. Now, if I was long at 50 and it goes to 47, I would exit at the risk of missing on a good recovery trade. Now, it has support at 42. It has support at 40. It has way better support at 38. I'm not going to even mention losing 38 because if you do, it's going in the low 30s. Now, on the off chance it can cut through all the massive resistance above and take out 53, that's the other extreme. It may hit 58. This one had a spike into the deepest part of the correction in 2022 for the market. It was completely going against the market. I don't know if it can repeat performance or not, but it is not. It is a weird stock. I could be long. You could convince me to sell puts to own shares. You can convince me to sell a put spread, but it's just not my style of stock. CRM, shortable. This red path is set. It's not quite a W, but it is considered a harmonic by some people, and it's an ABCD pattern. Target 1 of that is 295-ish, 293-ish, 290 maybe. Target 2 is below 260. Now, 295 is the base of the election, and 270 is the base of the breakout that got us to the base of the election. So it has support, but I would not be long CRM here. Earnings are coming too. CrowdStrike, I would not be long CrowdStrike. I bet you anything it's going to come back down to 980 to 980 or 990 through 970 are in play. In fact, it is shortable to a degree. Not that I want to trade headline stocks. So this stock owes us a headline, right? The settlement of the deal. If the settlement of the deal is announced, did they announce a settlement? Well, if they did, ignore everything. But if they announce a settlement of the deal, oh, okay, they agreed to pay $5 billion, the stock will rally, even though it's recovered the dip from the headline. You know, when they broke the world, technically, they've recovered all of it. They will pop a little bit, short that. So short one size, add to it on a pop of the headline if it comes out. The company's fine. I'm just trading the chart, okay? It's nothing against the company. Okay. Cisco, I'm short and making money. Moving on. Where's support? Miles below. I can't tell you where, but it's freaking miles below. This stock should retrace all the way back below 50. I wouldn't hold my short down there. Just manage the profits accordingly. Okay. All right. I wouldn't be long. I look left and it's failed here and it's failed here and it's failed here and here and here. Oh, okay. So there's even more failures. People are looking for a super breakout. If you can take out 64, I'll start believing that super breakout. Until then, under these conditions with the markets being at all-time highs, I'm okay shorting this stock and we made money with it. DataDog, good company, has the same prospects of breaking out, but the same concept. These are weeks. Every candle is a week. Look how many weeks it's failed under 140. Now you want to take out 140? If you can get to 170. So if you're long that prospect, you better be long in a way that would be okay with that. So selling a put spread, buying a call spread of sorts, and managing that. Like every week you have to roll and roll and roll and roll, and then you catch the breakout, and you would have invested very little money in it. If you can't do that, holding a call is going to be decimated unless you get lucky with the headline pop. Until then, it's a sell into 138 and buy the dip into anything below 118. It looks like solid support, and the zone is wide. So this is really conducive to selling puts, buying calls until you get the breakout. And the worst case scenario is you buy a good stock at a discounted price on the sold put part. If you don't know anything of what I said, we have a library of resources online. Reach out and I'll tell you where it is if you don't know where it is as to how to do this stuff. Or come into the live room. I can teach it to you live. 120 or lower is a support zone that extends all the way to 98. Okay, so I'm not sure what you're doing here. I'm not to be political, okay? A lot of you know how, my political stance and how I don't want it to come into my pocketbook. Like, I'm not going to let my political affliction buy or sell the stock. That would be stupid. And when I'm trading a stock that is so conducive to headline, I'm putting myself in danger just for giggles. Like, why would I ever risk money on a stock that's completely dependent on headlines? And I mean it. Look to the right bottom. There's not a penny in revenue, basically. We don't even know what the market or the model for the business is. So you're completely trading based on what's in the wind today. That's Vegas. So on the chart, I can tell you, okay, losing 26 gets you back to 18 or 12. And taking out 36 maybe gets you to 42. I have no idea. Completely at the mercy of the headlines. We have nothing that gives us an edge. So when we don't have an edge, we're just playing in mud with other mud people. I just don't want this for me. I do have to mention that this is the only SPAC that didn't go to $10, which is pretty weird. Dexcom, I had it as a buy the dip and I missed it. So buy the dip, I wouldn't buy it here. It's too high. Again, look how much higher it was, but I have no idea what happened. I asked for weeks. When it fell, somebody tell me what happened for it to fall. Like, what was the talking point? It couldn't have been a downgrade. This drop, this dramatic for 30, 40% is based on fundamental earning power. What happened? What changed? Okay, so until you get me that answer, I wouldn't touch the stock. If you lose 60, you're going to 32. Okay, and what will it take to get it back to 108? And what happens there? So your bumpers are 80 and 60. 80 will give you a nice bump. 60 will give you hell. I don't know what's what. Okay, so this was a buy the dip moment, and I missed it, so I'm not getting engaged with it. The reaction, it was a good deal here, but the reason why I missed it, this wasn't like I was a scaredy cat because of this chart. It was a support zone, but it was mild, you know, not too long ago. Look at where it was, so it's not cheap. And there's still a chance it gets to 80. If the market's correct, this one will follow it lower. Anything above 135 is resistance in my book. End phase, I wouldn't touch it until I figure out that they stabilized. But if you want to own shares and you're selling puts to own shares, remember, we used to sell puts at 100 and 110 and 104 and 89 and 85 and 80. Look at where it's at, 60. I told you don't touch it many, many weeks ago. And I told you sell the rallies and stop buying dips in it because their earnings power got slashed. Now they're building it back up. Okay, these are quarterly. And if you look at the, if you can zoom out a little bit, this level is less than half of what it was. So them losing 76 is huge. That's huge because now it's in free fall. And rallies into 100 are going to be considered a roof without a really good headline. If I'm long the stock, it's too late to panic, but I would not add. With that, we end video number 1.